I'm Jason Stipp from Morningstar, and welcome to the Friday Five. This is our look back at 5 interesting headlines for investors. We have some 80-degree weather here in Chicago today, and it's making me go, Morningstar Markets Editor Jeremy Glaser has also got 5 things that are making him go, from the markets. He's here to join us. Thanks for joining me, Jeremy.
You're welcome.
So what do you have for the Friday Five this week?
A few head scratchers, but we saw Microsoft introduce a new phone. The former CEO of WAMU testify in front of Congress. Toyota runs into even some more problems, which if that was even possible. We saw retail sales numbers coming even better than we expected. And finally, some interesting perks out of Abercrombie.
You know, sometimes when I'm using a Microsoft product, I go, a lot. So what do you have on Microsoft today?
They introduced a new phone called the Kin. 2 models that are geared mostly towards teenagers and to the kind of the tween crowd. So from the same group of people that brought out the Sidekick, which was so popular in T-Mobile for years. What made me kind of question this decision is that it's a completely separate platform from their Windows 7 phone, or Windows Phone 7, that they're rolling out later. Now, the idea of Windows Phone 7 is to compete against the iPhone and against Android and to be a truly modern smartphone application, but the Kin is completely separate. And I think that a lot of teenagers are not going to be that excited about getting somewhat of a dumbed-down smartphone. With the pricing for a lot of these full-feature phones at about $99, I don't know if there's a lot of place for this kind of in-between a regular phone and a smartphone. It's a weird market to get into.
So much competition in the space, you really have to hit the nail on the head on that one. So for number 2, some interesting and sort of quizzical statements from a bank CEO. What do you have there?
Yeah, the former CEO of WAMU got in front of Congress to talk about how it was nothing that the company really did that sent it into bankruptcy or sent it into the FDIC having to come and seize it. It was because the government didn't give them a bailout like they gave everybody else, or didn't give them the same opportunities to be bailed out like other companies did. This is somewhat, as you said, a quizzical statement. I think it's clear that WAMU's lending standards were nowhere even close to up to snuff. They were running out of capital. Deposits were running out of the bank as fast as people could line up to get their money out. It doesn't seem like, given amount of time, they would have been able to turn it around. The fact that they weren't willing to take personal responsibility this many years past the actual failure shows a lot about where their heads were when they were, in the middle of the crisis.
Rationalizations can cause for some very strange pathways there.
Yeah, exactly.
Speaking of pathways, Toyota has had a very interesting and potentially rocky one. We've reported on it before. What's so quizzical on Toyota this week? Well,
this week, Consumer Reports came out with a don't buy rating on a Lexus SUV. Now, this is an extremely rare rating for Consumer Reports. Sometimes they might say this isn't the greatest, but to just unequivocally say you should not be buying this is incredibly unusual. And Toyota, in response, actually pulled the sales of this SUV worldwide and is now testing all the other ones. I think there might be some problem with the software and the stability control programs. Just more software-related issues, more safety-related issues from Toyota. It seems like what looked like was a relatively simple fix with an accelerator pedal is becoming a much broader thing of a much broader quality issue. But one of the most other puzzling thing is that Toyota's sales really have not dropped off yet. The incentives that they've had out there have people out there and they still want to buy Toyotas. So it seems like a lot of their brand equity hasn't completely disappeared yet, but I think a few more high-profile things like this, and it's going to be hard to convince people at any price to buy into a Toyota.
Speaking of people going out and buying things, retail sales, I figured it might do a little bit better, but were you going, when its retail sales came out this week?
Yeah, it definitely was surprising when I got that email in the morning saying that retail sales were up 1.6%. Auto sales had a lot to do with it. People were out there buying cars, but really across the entire economy, consumers were out there, they were spending. It's a little maybe confusing because unemployment is still really high. There's a lot of talk about going to a new normal of consumer spending where people are going to save more, but people who have jobs now seem to be a lot more comfortable of them. They don't see there being the mass layoffs that there were before, and people are willing to go out and buy those things that they were putting off for so long.
So if consumers are out there, they're probably at the mall, they're probably at A&F, and if they're buying things at A&F, surely the CEO deserves some kind of reward for that, right?
Yeah, absolutely. So the CEO of Abercrombie & Fitch seems to really like private jet travel, and he was charging a really substantial sum of money to the company for his own personal jet use. So in order to try to tamp down on this, the board of directors said you have to keep it under $200,000 for your personal use, but if you agree to this, we'll write you a check for $4 million to make up for the inconvenience. And that really is a head scratcher. I'm not quite sure if not using a jet is worth $4 million, but if that's a deal that I'd have to make, I'd be happy to take it.
It sounds like really the way to not fly to me.
Exactly.
Thanks for joining me, Jeremy.
You're welcome.
From Morningstar, I'm Jason Stipp. Thanks for watching.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.